Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 2nd of March, 2021. So, yep, welcome everyone. Welcome to this Tuesday's morning session where we're gonna have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So. The content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts, the first one I want to pick up here is Nikkei 225. Now looking at this index here, you can see that it did push higher initially, however it failed to maintain that upside, and yep, it drifted back down basically, and ended up closing the day in the red. So guys, I mean, yesterday we saw the markets kind of popping higher a little bit here, so be careful right now, because I mean we saw today the Asian markets drifting kind of I would say nicely to the downside, so just be very careful with those further upsides on the European and US indices. I'm not saying that there won't be any, but just like I said, if somehow it seems that there is a bit of weakness here, or even actually a bit of undecisiveness between the buyers and the sellers. So yeah, for now, like I said, looking at this technical picture here on Nikkei, we can see that the index is coiling up here a little bit. It's stuck between these two lines. So let's see which way this is going to break out to, because again, I'm probably going to stick to neutral right now, because I would need to see a breakthrough one of these lines here, the downside one or the upside one, before I could consider the next directional move. So jumping into Shanghai Composite, now a similar story, drifted back down, tested the 21-day EMA, and then drifted back down. And at one point, it even managed to break this upside line here, drawn from the low of the 19th of March. Now, that has not happened well since then, so in a way we should be a little bit on the cautious side. Not saying that we're turning bearish here, but just to be on the safe side, guys, keep your eyes on this upside line here. We can get rid of this downside line, no longer needed. Yeah, for now, I would say if you want to go for some higher levels, well, we'll probably wait for a push above this barrier right here, the 3,570 territory, approximately around here, and which also kind of coincides, almost coincides with this 21-day EMA. So this key resistance area will be the one to watch in the coming days. But for the downside, guys, well, all eyes are on this upside line, and of course, yeah, as I've mentioned to you previously, this whole area here between these levels, and yep, keep your eyes on those, because again, if let's say we get a break below the 3,446 territory right here, that's the low of the 29th of January. Now if we do get a drop below that, we would get a move below the 100-day EMA here as well, and of course this would also confirm a forthcoming lower low. So that's why, guys, for now, I mean, it is at an interesting spot here, so let's see what we can do with it further. Now, German index, DAX here, and yep, it drifted higher. It closed yesterday nicely in the positive territory, however, still below this downside line, drawn from the high of the 8th of February. If we take a look at the cash index right now, we'll see that the price is back below the 14,000 mark. So we're currently trading around the 13,960 zone. So it's basically somewhere around here. It's basically where the candle here opened, yesterday's candle opened. We're still above the 21-day EMA, but we're below this downside line. So that's why probably I'm gonna, for now, I'm gonna just take a bit of a careful approach, neutral one maybe even, because for me, let's say to start looking at lower areas again, I would need to see a drop below the 13,830 territory right here, this one highlighted. But for the upside, I need to see a break of that downside line first before I could get a little bit more excited with higher levels. So for now, it is how it is, guys. I mean, unfortunately, that's the little game plan right now. DXY, a dollar index. So looking at this picture here on the dollar index. Everything's working out nicely here according to the plan. The plan was that to wait for a push above this 91.05 territory before kind of aiming for some higher levels. So what I said to you recently, that if we get a push up and we do get that daily candle staying above this area, above this 91.05, then yes, I'll go for the 100-day EMA initially, and then maybe for this 91.60 or the 91.75 levels right here, and then I'll take it from there. So we didn't really get that kind of a nice close, I would say, but to be honest, today's trading activity right now is showing that that DXY is willing to travel further north. So for now, I'm going to stay a little bit on the bullish side, but again, I'll be very careful near the 100-day EMA. But if that gets cleared, my next target is the 91.60 or the 91.75 territory. So all this area between. Jumping into gold. So gold is also taking center stage right now because it is declining. Looking at this picture here, so everything's kind of working out nicely. So on Monday, yesterday, in the morning, I told you guys to keep an eye on this area right here, the 1760. What I said was that if this area provides resistance, then we could see a decline, a move back down again, where my next target is going to be the 1704 territory. And just to show you what that level is, that's the low of the 15th of June. As you can see, basically here right now, I mean, we've almost managed to reach that area. We just fell shy by a few points from kind of from hitting that level. I'm still gonna stick to the downside, to be honest, or of course depending on how this trading today is gonna end up being. But again, I'm still kind of leaning a little bit more towards the downside, because ideally I would like to see maybe a test of this upside line here, drawn from the low, somewhere from the low, the 22nd of May 2019. Although it's a bit of a tentative upside line, but nevertheless, I'm still keeping that on the chart. So, long story short, for now, I'm leaning a little bit more towards the downside. And yep, for now, I'm kind of, this is my scenario. For the upside, well, if it starts climbing back above this not this one right here, sorry guys, yep, let me just adjust this very quickly. So let me just actually get rid of some of these lines, because some of them are a little bit in the way. So I need this arrow here. Basically, my upside scenario could come here on a break of the 1760 territory, or 1765. A nice good push above this resistance area, yep, could open the door for a larger correction to the upside towards this downside line, and then we'll take it from there. WTI oil, so very quickly, so quietly drifting to the downside, and of course we'll have to keep an eye on the OPEC meeting this week, guys. I mean, so yeah, keep that in mind. If I'm not mistaken, that's happening on Wednesday, but just quickly double check that. But nevertheless, so far the technical picture is kind of working out nicely here, because what I said before was that if the commodity drifts back below the 60 2.25 territory, which I've mentioned to you yesterday, because yesterday, basically in the morning, my morning video, the price was hanging above this area, but I said that on Friday we had a strong decline below this, so wait for that daily candle to shape up here, and as you can see, this is the result we had. We saw the commodity drifting back down here, and ending up kind of moving back towards this 21-day EMA. So far, so nice. So far, so good, I would say. So, and everything's working according to the plan. And yeah, for now, basically, what I'm going to do here is I'm going to stick to this 21-day EMA as my next target, and then of course if that fails to provide support, a break of this 21-day EMA could lead to a test of this upside line here, drawn from the low of the 29th of October, and then we'll take it from there, guys. Now, in terms of, by the way, in terms of the economic calendar, keep your eyes today on some of the data. We do have the preliminary CPI figures coming from the Eurozone coming out today. We also have the Canadian GDP numbers, which are going to be in focus. And yeah, I think that's kind of it for from the kind of the top data. But yeah, those could be interesting ones to watch. Of course, keep your eyes on the political situation in the US. But for now, basically jumping into Ethereum, we can see that the crypto managed to recover somewhat here after kind of declining nicely. So basically, let's adjust a few arrows here. So first of all, let me just remove some of the lines here, or actually I can recycle those. There we go. So basically, long story short, for now, for Ethereum, the fact that it's trading below the 21-day EMA, of course, is a little bit on the okay. So guys, I mean, right, I can see there's a comment here in the, so from Michael. I mean, as I understood, the sound is not very well. Well, I mean, I hope, yeah, I'm using a different microphone, a different headset, basically. So, okay, so there's a problem with the sound. So, okay, I'll try to fix that in for my next video, but yeah, thank you for the feedback, Michael. I'll try to see what I can do with it, but yeah, okay. Right, basically for now, well, I do apologize if there are any issues with the sound, with the quality of the sound, so I will try to fix that for my next video. But coming back to the markets here, the Ethereum here, yes, it is still trading below the 21-day EMA. So in a way, even though we saw a nice recovery here, I'm still kind of let's say skeptical of let's say higher levels. And another thing as well, I mean, if you remember, I talked a lot about this, and basically I'm keeping an eye on the March monthly candle, because again, we saw this February candle pushing strongly to the upside here, reaching that psychological 2000 territory and slightly above it, and then it kind of retraced by the end of the month. It did have a strong retracement. Let's see how far this can travel this month. I mean, if this is the kind of that barrier, then maybe we could see a bit of a larger correction here to the downside. But basically, before, let's say, aiming for those lower levels, well, keep your eyes on this little hurdle right here, this 1405 territory, because again, this is quite a decent area of support, because previously it did show that its strength here acting as a resistance. Now it's showing its strength acting as a support. But if that gets broken here and we see that daily candle falling below this 1405 territory, then yes, we'll go for some lower areas. For now, even for the upside, for example, we would need to see maybe a push above the 1666 territory, marked by the inside swing low here of the 15th of February, and then yes, higher levels could be met. So, jumping into AUD CAD, so something to keep in mind for you today. AUD CAD is on the at an interesting spot, I would say, because again, we've managed to break the upside line, and now it seems like we could be, just could be, forming a possible bearish flag here. Now, to support the downside, we are trading on the daily chart here. We are trading below the 21-day EMA. So, yep, I mean, we could see, if of course this 21-day EMA continues to act as a good area of resistance, we could see another decline. But to be a little bit more on the safe side, wait for a drop, a good drop below this 0.98 territory, and then go for some lower areas. Because at the moment, I mean, it's kind of a tricky one here. It might travel back up here, but for me, let's say to aim for some higher levels, maybe I would need to see a push above the 0.9851 territory right here, and then yes, we could take it from there. We could go for some higher levels. I don't know if we could go for all these February highs here, but yeah, we'll take it from there if we do see a push back above the 0.9151 territory. For now, I'm kind of leaning a little bit more towards the downside here. However, again, before kind of, let's say, getting comfortable with that idea, I still need to see that confirmation break below the 0.98 territory. Jumping into USD Gpy, to be honest, quick update. I talked about this one yesterday, and basically I said to you guys that I'm leaning a little bit more towards the upside. I mean, we could see maybe this one as a potential rising channel here. It is kind of a, but I mean, it keeps violating this area here. Don't get me wrong, my next target is the 107.05 territory. If at this point here, I mean, I would say it's, if you are already in a trade here, then yeah, you can keep it. You can have your stop loss on break even if you're in profit. But for right now, for example, although I am still targeting this 107.05 territory, the fact that we're kind of let's say hanging around here near the upper bound of the rising channel, I'm gonna take a bit of a careful approach. Maybe we'll see a bit of a corrective move. I mean, it would be nice maybe to see a bit of a corrective move here, and then maybe go for an upside here. But yeah, I mean, for now, it is how it is. If we do see a correction, by the way, keep your eyes on this little hurdle right here. Or actually, not this one right here, sorry, up. Somewhere around here, this 106.55 territory. So it might provide a bit of support here, and if it does, then yes, a nice good push higher could be possible. So jumping into Gbp Aussie. Now this one's interesting. Yesterday, or should I say, I'll start off from Friday. And Friday we had a fantastic pop here to the upside, all the way to the 200-day EMA. Once again, the 200-day EMA did its job, and it provided good support. And yeah, I mean, for now, I mean, what I'm going to do here is I'm going to keep my eyes still on this 200-day EMA. Although yesterday we had a bit of a decline, we did retrace nicely here, but and oh, by the way, although we also fell below this 1.7925 territory that I keep having here on my chart, still we are hanging around this 100-day EMA. So although maybe there is a little bit of kind of I would say there is a chance for this one to move lower, but to be honest, I would prefer to wait maybe for a drop again below this 1.7789 territory before examining the downside, or should I say getting a little bit more comfortable with the downside. In terms of the upside, well, of course, the push above the 200-day EMA, that's what we would need to see, but if we'll start seeing already a push above the 1.8024 territory somewhere around here, yep, I'll start looking at some higher levels. Of course, I'll be very careful near the 200-day EMA, but if that gets cleared, I mean, that's going to be an interesting trade here, and we could maybe go for some higher, for a higher high. But again, that's, for now, it's I would say it's a bit of a waiting game here on Gbp Aussie, so don't rush into anything, because again, at the moment it's going to be probably a straight-on battle between the bulls and the bears here, with kind of even equal powers. I mean, so yeah, I mean, at the moment it's interesting, but let's wait on this one. EURUSD Gpy, another interesting can see why. Because first of all, we did drift lower yesterday, but we didn't fall below the 0.8616 zone. So now my big question here is, because we're kind of trading near this downside line again, will we get that nice pop above this area? And looking at the picture here, I mean, we're back below the 0.8671 zone, which is the lowest point of April. Yeah, I mean, for now, although it's very, very tempting here for to go higher. Yeah, guys, I mean, let's wait and see. Let's not rush into anything yet. Again, because we're still below the downside line, the trend is still to the downside, and I just don't want to get caught up in anything here, anything that could ruin our accounts. But yeah, guys, I mean, if this gets broken, if the downside line gets broken, and we see the daily candle staying somewhere above the 0.8671 territory right here, then, well, I mean, maybe we could go for some higher levels here. Of course, we would still have a lot of obstacles on the way here, like for example the 21-day EMA, but if that gets cleared, well, I mean, we could go for maybe a larger correction here to the upside. And just to kind of show you what I'm talking about here, I mean, oh no, not this one, not this one. Where's that line? The Fibonacci retracement. There we go. So if we drag it from this top here and take it all the way here, you can see that yes, we already did reach the 23.6% retracement, but that was like last week, so good result. But again, if we do get a nice push here, and you know, in a way, you could keep your eyes on that 23.6% retracement in the Fibonacci as your kind of breakout point. I mean, that's quite, it's a good strategy as well here. And if we get a push above this, then yep, my next target here will be this 0.8797, which kind of coincides here with this February 9th high, and then we'll take it from there. And finally, EURUSD. Oh, by the way, with EURGBP, it's basically the fact here that it's not the euro strength here. It's more of a GBP weakness. But again, that's why I was saying to you guys with GBP Aussie, for example, wait and let's see if the GBP kind of gets weaker a little bit for now. Like I said, the Euro-GBP pair is the one to watch as well. And EURUSD, look at this. I mean, look at this move here, and yep, we are breaking this 1.2023 territory. So I talked about this one, and now the big question here is, will we see a further decline? So for now, I'm bearish, but cautiously bearish, because my next target is the 1.1952 territory marked by the lowest point of February. But if that gets cleared, my next target is the 1.1924 marked by the low of the 30th of November and the 1st of December. And then I'll take it from there. So I'm not going to drag this one way too much to the downside. Initially, I'm going to just aim for these two levels. So guys, that's it for this session. Once again, apologies for the sound quality. I mean, I'll try to see what I can do with it. So yeah, thank you very much, and sorry for maybe damaging your ears or anything with the crunching voice here. But yeah, guys, I mean, thank you very much for joining in. Thank you for the comments. Thank you for the likes, of course. Thank you very much for that. Join me later on, my Traders Tea Time, as always, 13:30 GMT. For now, have a wonderful, wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.